This deal can be seen as quite an expression of confidence in the UK economy. A lot of businesses recently have been speaking out against recent tax rises on employing staff and various other measures. How optimistic are you feeling about the UK then as a result of this deal?
Good morning, and thank you for having me on the programme again. We already have a very significant presence in the UK. It's our largest balance sheet in all the countries where we operate. We operate the largest balance sheet in the UK. We mostly do mortgages, and this transaction will help us accelerate our transformation program and serve our customers better. Obviously, you know, we like the UK. We like the regulatory regime in the UK. We think is the second largest financial market in the world, and we want to have a significant presence in this market.
What happens to the TSB brand, or how quickly do you remove it, Jose? Your business, of course, has a lot of history around Abbey, Bradford and Bingley, other businesses going back years, taking those over and rebranding them as Santander. Is that going to be the same path that we take here?
We do this, again, for the customers. I mean, we believe TSB customers now will have access to more branches, to better technology, and we think this is going to be a better value proposition for them. The transaction is going to take a few months, probably into the first quarter of next year, to be finally approved. It needs to go through different levels of regulatory approval. So it's going to take a while before we actually take control of the asset, and then, you know, we will decide what to do. But the TSB brand is a very important brand. It has a lot of value. It's been in the market for over 200 years, and we believe it's a brand with a lot of value. But again, it will take time before we actually take control of the bank.
Well, Jose, it's Creedy in London. Talk to us a little bit about when I appreciate that you have little visibility at the moment until the deal actually closes, but there's a question here around the math of TSB, and one that perhaps the value that this deal is closing at is perhaps too expensive, and the only way that it works is if there are massive job cuts to maintain some of the costs. Is that something Santander is considering in terms of moving forward with TSB?
I think the main reason why the numbers work is because, yes, we can operate the combined entities with a lower cost base, but most of these savings will come from projects that TSB is currently running that we will not need to do when the two banks merge, investments in digital means and channels, etc., that we are doing at Santander. So yes, there will be savings. Yes, within these savings will help us offer better products at lower cost to the customers, but not all of these costs will come from job cuts or branch closures. Clearly, customers are now have opted to bank in a different way in the last few years. They're using more digital channels to relate to the banks. And that is a reality that we obviously need to adjust to.
Well, Jose, can you just give us a little bit of background, international audience, a little bit of background on how this deal actually came about? You know, there are plenty of reports that Barclays was in the running as well to take over TSB. There's also been lots of speculation that Sabadell has been trying to offload TSB as it fights kind of a takeover battle in terms of BBVA at the moment. Where did Santander start in terms of getting interest in TSB?
Well, we looked at TSB 10 years ago when when Lloyds decided to split it out, and we actually had interest in acquiring the asset, but the process was very, very long. It was a very lengthy process, so we dropped. This is an asset that we like, that we know, and when Sabadell decided to run a process, because this obviously fits with our capital hierarchy in terms of bolt-on acquisitions. And as we have said in the past, the UK is really important for us because it's a stable market. We have a low-risk business. TSB has a very, very similar business to what we have. It's very complementary, and financially it works very, very well. So that's when we decided to look at TSB again.
Good morning, it's Guy. Why is the UK the right place for you to put your money to work in? My understanding is that this is one of your lowest profitability jurisdictions. Why aren't you putting money to work in Latin America or other areas around the world that are going to generate a higher rate of return for your investors?
The UK is really important because it helps stabilize our cost of capital, our risk-return profile. We have a low-risk business in the UK. It's a stable returns in a strong currency. So this helps stabilize the volatility of our returns that come in developing economies. We have a plan. Prior to the acquisition of TSB, we had a plan to increase our profitability in the UK from currently 11% to by around 1 percentage point per year in the next 3 years. This acquisition will help us accelerate this improvement in profitability, and we think we can reach 16% return on equity in the UK in sterling in the next 3 years. A transaction that has a return on capital invested of around 20% or higher, and it will be accretive from year one. So we think financially, not only strategically makes sense, but also financially is a very strong transaction.
I think it's really interesting you're talking about the fact that it's in sterling, the fact that the currency matters in all of this. Did I hear you correctly just a moment ago when you said you're getting access to better technology from TSB?
Yes.
That doesn't seem to be the experience of a lot of people. All right.
Okay, what I mean is that for TSB customers, we are doing this because we think we are a better holder of the asset. We can now offer our technology to TSB customers. They will have access to our bigger network, so they will have more physical distribution network, better technology, better digital. That's what I meant.
Are you going to get rid of the TSB technology base because it's historically kind of been challenging?
We are going to migrate to our own technology. Yes.
Okay.
Can I ask you about the US, your US expectations, Jose? That's an important part of your business as well in the United States. And I wonder if you're minded to increase exposure. I know that's been a plan for a while. If that's still the case, is that affected in any way by your plans elsewhere?
No, in the UK, we have our own business as usual strategy. We launched our native digital bank, Open Bank, in October. We already have over $5 billion in deposits from over 100,000 customers. We are integrating the different units that we have in the US. So we are not looking at doing M&A in the US at the moment. We are rather looking at developing our own strategy with the aim at gradually integrating the different businesses that we have in the US.
Well, Jose, sticking with the theme of M&A, let's circle right back to Spain here. There's been a question in the last week or so, especially after the concerns around banking regulation, banking consolidation between BBVA and Sabadell, of whether or not Spain and the Spanish government is actually amenable to banking consolidation and M&A within Spain itself. Your thoughts?
No, I think this is for Sabadell shareholders to decide. So at the end, these are two private companies. This is normal course of business in the life of companies, and it's for the shareholders to be free to decide what to do in this case.
Final quick question. Do you think this transaction is going to make it harder for BBVA to take over Sabadell? And if so, was that part of your calculation in making this acquisition?
No, that's not what we think about, and obviously we are neutral in that sense. Again, this is an asset that is available in one of our core markets. We have the fiduciary duty for our shareholders to look at any bolt-on acquisition in the markets where we operate. This transaction will make our presence in the UK better. We will be better positioned to serve our customers and TSB customers better, and we will be able to make greater returns in the UK. So if this has any impact, obviously, in that sense, we are completely neutral.